Anybody know? While waiting for the rest, see got some people to log in. By the way, who is doing the recording tonight? Who is taking recording tonight? Lawrence. Okay. Thank you, Lawrence. Advance to you. And good evening, Hua. Welcome. Tony, welcome. Okay. Let's start. All right. We have about 9-10% right now. Okay. Everybody can hear me, eh? Okay. And tonight the sessions, I like to talk about more in detail the 310 indicator. All right. Hi, Lam. Okay. And I go a little bit background, the components of the 310s. Okay, the components of the 310s. And that is not that important, but at least you know where it comes from. Right. And then, of course, we're going to talk about how to use the 310. All right. Now, when I introduce an indicator like this, right, it does not mean that this indicator you're going to trade this indicator stand alone. It doesn't mean that, right? Meaning to say that you don't just base on the indicator. Okay, right now the 310 is showing me a buy, therefore I go and buy. That is not right. Okay, that is not right. The core is always the supply and the demand. We identify the supply and demand. We identify the trend, right? We follow the trading rules, right? And the 310 is just come in as an additional tools for us to use. That's all. So never try to look at a 310 and set up. Okay, here I have a setup on 310, therefore I'm going in to buy or I'm going to sell. Right? Please don't do that. Yeah. I want to repeat again. Right? The basis still come from the core. The core is still our supply demand. Right? You still have to look for a trade based on supply demand and use a 310 as an additional tools to alert you in advance that a trade is about to take place or where the trade can take place. That is the power of the 310, right? The 310 not only tells us when we can actually enter the market. The advantage, one of the main advantage I see 310 is it can actually alert us well in advance. Just like example, if we already see that okay, we have set up to sell in the downtrend, and then I have a few supply, we have identified a few supply in the downtrend, and obviously based on supply and the demand, we will wait for the price to retrace back to the supply and sell. Correct, right? But now with the 310, it's just an additional tools to alert us. Okay, now the 310 is setting up right now, right? And then we wait for the 310 to move into the zone while we watch the price to move into our supply. So it's an additional tools. Okay. No charge yet, Jason. You looking from Korea? Yeah, we're going to talk about the 310s, right? Can you see the PowerPoint? Jason, can you see PowerPoint? Huh? How about the rest? Can the rest see the PowerPoint? Huh? I thought just now have. Can you see PowerPoint? Right. Okay. Okay. Let's test. Yeah. So today we talk about the momentum indicator, right? Now we talk about the supply demand, right? We are trend trader. Demand basically trade with trend, right? First of all, we want to identify what trend, right? In a uptrend, we always look to buy, and in a downtrend, we always look to sell, right? We try not to trade against the trend, but we can trade against the trend doing a counter trend trade provided certain conditions or criteria fulfilled or met, right? But when we do a counter trend trade, always remember to take your aggressive profit, right? Don't expect the price to go home run because we are doing counter trend trade. Simple as that, all right? Now, the next principle, that there are actually 4 principles that prove which stand the test of time until today, right? One of the first principle is by Dow, D-O-W, right? Which is trend. Once a trend is established, example, once an uptrend is established, the probability of the price going up, continue to go up, is higher than it reversing, right? That is the first price behavior, first principle. Now, the second principle of price behavior is momentum precedes price. Now, what do I mean momentum precedes price? Momentum precedes price, man. When we see a momentum, right? When we see a momentum, that means that either the price and the oscillator both make a new high or both make a new low. That is called the momentum, right? And then once we see the momentum, right, means that we have the first leg up. Right, price goes up, make a first new high. Momentum also go up, make a first new high. It means that there's another second leg is yet to come, and we try to take advantage. We try to ride on the second leg, not the first leg, but second leg, right? Now, so the principle is very easy. Now, let's say that we basically follow these 2 price behavior principle. One of them is a trend. We trade with the trend. Now, in an uptrend, we wait for price to retrace back to our fresh demand, right? At the same time, we like to see the momentum oscillator, the 310, actually make a new high of momentum high, all right, and together with the price. And when the price start to retrace back, right, we want the price to retrace back to the demand. That is, then we expect the demand to hold, right? Okay, so this is the second principle that we'll talk about. Okay, momentum basically provide 2 benefits in our analysis. The first one is it helps to identify confirmation early stage of the trend, right? When we see the price in go sideways, and then suddenly we see the price break to the high and create a new momentum high, right? The price at the same time, the 310 also create a new momentum high. That is the the initial stage or the early stage. We can say that we're going to have a new direction or new trend, right? So by looking at the 310, we know that we can actually get in. We know that there's a new trend is about to take place, right? Another advantage about the 310 is they let us know whether the trend, let's say we are in an uptrend, the market is going up for a long time. Is the trend coming to the end, right? Is the trend coming to the end? Losing momentum, loss of momentum, right? So or the 3 pushes. These are the signs that tells us that, okay, now the price is coming. This uptrend is coming to the end. It's running out. Energy is running low. Now maybe it is time that I start to lure counter trend trade. So we can actually incorporate this 310 analysis into our counter trend trade, right? So basically, what do I mean by that, right? Now, earlier we say that we always want to see, when we want to do a counter trend trade, right? Let's say in the uptrend, the market must already move up for quite some time, and then it hit a higher time frame supply, right? And then price get rejected, trend line removed, etc., right? So this is what we call about counter trend. Now, when we add in this 310, now before we take any counter trend trade, we want to see this second point, right? To assess the likely end of the matured trend versus via non-confirmation in the form of momentum diversion. Basically, three pushes or loss of momentum. Later, I will show you some charts, right? I want to explain about the theory first. Is that okay? Now, if you understand it, or if I speak too fast, you really don't understand it, It doesn't matter right now. I mean, Raymond is recording the sessions, and Chang will put in inside the student only access the web, right? So you can always go back and refer to them. Okay. Now, what is momentum and why it is important? Right? Now, when we talk about momentum, we're talking about the rate of accelerations of a currency, price, or the volume, right? Of course, when you trade forex, we don't really talk about volume. There's no volume in the forex, right? Because there's no centralized exchange. So we are more talking about the how fast the market move out of the trading range. Okay. The key point here is once we see the momentum, the odd favor continuation of the move, right? Meaning like I Okay. Oh, just now, where did I stop? Which slide did I stop? Can you tell me? Which slide did I stop? Slide 2. Okay. You mean this one? Is this the one? Slide 2. Next. This one? Okay, so basically we move on to the next slide. All right, the 310 actually make up of the 3 components, right? One of them is a zero line, right? And the fast line is actually the indicator which I sent to you. By default, they give you a blue line, if I'm not wrong, a blue line or green line. All right, you can change the color actually. Okay, either the green line that means it's your fast line, right? For me, I use a blue line for my fast line. And your red line is your slow line, okay? So basically, the 310 is made up of these 3 components. Now, the general concept, right? The general concept when you trade with the 310 is, we will look for long, we will look for buy, right? Initial, when the slow line is, that means that when the red line, slow line is the red line, is first cross below above the zero line, right? And the fast line has pulled back to the zero line or below the zero line, right? So this is a setup, right? It's not meant to pull the trigger yet. It's just a setup, okay? Means that we are waiting for when we want to buy, we want the red line to stay above the zero line, right? And if we can have an upslope zero line, red line, is even better. Upslope means that you see that the red line is doing upslope, not coming down slope, right? That is even. And then the fast line, which is your green line, we want the line to cross from above or pull back from above the zero line towards the zero line or below the zero line. Okay, that is a setup to go long. And for a short to sell, right, we want the slow line, which is the red line, to stay below the zero line, while the fast line, which is the green line, you will pull back towards the zero line or above the zero line. Okay, so generally this is the concept when we trade the 310. All right. Now, new momentum low. You can see when both the price and the momentum, which is a 310, form a new high or a new low, the odd favor higher or lower price is yet to come after a pullback. So you can see that we have a range market over here, right? Market dropped and it pulled back again back into the range. The next time you see this drop, huge drop. This is called the momentum, new momentum low. The price has created a new momentum low, while the 310 is also making a new momentum low, right? We are not looking for a low which is like not so obvious. you might argue that, well, this is also a low, lower than all this low. But look at the 310. The 310 is making a low, but it is, look at here, right? It is not so obviously, it doesn't, the low created by the 310 is not very, very obvious. We want a very obvious new momentum low. Then, you see, this is a setup. For us to sell, remember just now I said, for us to sell, we need the red line, which is a slow line, this line, to stay below the zero line, right? And if we have a downward curve, it's even better. While the fast line start to pull back towards the zero line or above the zero line. So this is, when we see this kind of setup, first market dropped, you see this price drop, 310 drop, it both create a new momentum low, right? That is a setup. Then you wait for price to retrace back up, right, into the level of supply, or the previous support become a resistance, right, or the gap. Can you see we have a gap up, right? So all this can be one of the criteria, right? So you can wait for price to retrace up into the supply, and then the fast line is above the zero line. The red line is below the zero line, and that is a sell, right? And you can also look for, if you don't see a very obvious supply on the left while the price is retracing back up, you can always look for a KR, key reversal bar. Can you see that? There is a key reversal bar. Remember we talk about a key reversal bar inside our zone entry, right? It's like the dark cloud cable or the piercing line. Remember? Those are the key reversal bar, right? You can wait for, this is, see that this is a bar chart, the price, this candle or this bar, it goes up here, and then next bar, it make a higher high than the previous bar, but it close below the 50% of the previous bar, right? That is a key reversal bar. So when you see, either you can wait for the price to trace up to the supply and you wait to the sell limit there, or you can wait for price to retrace up into a zone, and then you see a key reversal bar over here, right? And you sell immediately after the key reversal bar. Okay, and see how the price go down. Okay, so that is one setup. Right, that's for sell. And for buy, you can see that we have been in the uptrend sideways. You go into a range. Then you can see over here, price has break to the upside and create a new momentum high. Can you look at, see this new momentum high compared to this two high or this three high, right? And see this 310 making a new momentum high compared to all these little green hue, green top. See here, right? This is an obvious new momentum high. So that is the setup, right? That is not a trade. That is a setup. So when you see this setup, right, you wait for price to retrace back into the demand, right, back into the demand, while the fast line pull back to the zero line or below the zero line, while the slow line is above the zero line. That's where you put your buy limit here. You can see that previously we talked about when we have a price breakout, the supply and the demand that created after or before the breakout has a very high probability. You can see that we have a rally, a base rally, right? This is the demand that remove this resistance on your left here, right? So this becomes significant, right? Because these are the buyers here are the one that committed a new high and pushed through the price. So when the price come in the future, this demand that created or rather this demand that removed the supply or resistance, right, has a very high probability to go long. And see how the trend pull back, okay, and it's everything nicely lined up. And you have a P reversal bar as well. Can you see that? These two bar. We have a bar drop down, next bar price trade lower, then the previous bar low, but it goes up high. Can you see that? That is a key reversal bar. And you enter on the third bar. Right? momentum low again. You can see that the price has been in a sideways. Then we see a price dropped. Right? You can see this dropped, and I see the 310 also dropped. Can you see the huge difference between the new low that created after this? See the price make a new low, and then the new momentum also make a new low. It's very obvious new low, right? So when we see the momentum, it means that there's lower price is yet to come. Now, where is the lower price? You wait for the price to pull back. You see the price pull back while the fast line pull back above the zero line, right? And then if there's a supply here, you sell at the supply. Otherwise, you use a zone entry. And this is your second leg. This is the second leg yet to come. This is the first leg. Price retrace back. Second leg. Got it? Now, more example here. I can see that the price actually make a new momentum low. 310 also make a new momentum low. Can you see this new momentum compared to all the previous low that have created? It's very obvious. We are not looking for this kind of tiny little low. We don't consider this is a new momentum low, right? Compared to you might argue that, well, this low is lower than this low, and it is lower than this low. Yes, I can see that. But what we want is really the momentum. We want to see the momentum there, the aggressive sell out or the breakout, right? And the price pull back above the zero line. The red line, the slow line, stay below the zero line. Price pull back to the supply. That's where you sell. Okay, so that is a first leg. Price after price pull back. Then this is the second leg. I can see that even if we work down all the way to the 60 minutes time frame, we have a new momentum low. Look at this new momentum low on the 310. Look at all the rest of the low and look at the price. Alright, and see how the price pull back to the supply over here. This is the second leg. Okay. Now example, you see price is in the range. Then we see the dropped. New momentum low in price and the 310 as well. When the price finally pull back, it pull back to where? To drop, base, drop. That is where the supply is. Alright? And you see, when you don't trade, if you don't have a supply over here, now in this case, we have a supply on the left. At the same time, we see a key reversal bar. Right? And then that's where you sell after this bar form. Or you can put a sell limit there. If the price retrace up and it doesn't trigger your sell limit and it give you a KR, key reversal bar over there, sell it. Alright? If your sell limit then never get triggered, but the price show a key reversal bar, sell it. Okay, now you can see we are in the uptrend and price going to the right, and the price suddenly, you can see this price, it break to the upside. The price has created a new momentum high. But look at the 310. The 310 refused. Can you see that? The 310 didn't make a new momentum high. If you compare the price that make a new high compared to all the previous price, this is like standing tall. It's a tall man, right? Like a Yao Ming like that, tall man. The basketball player from China, Yao Ming. Right? You never miss this tall man. But look at the 310. It's almost the same. Yes, it is slightly high, but it's almost the same. It's not say it is significantly taller, right? You can see this 310. So when you see such a scenario, it basically tells us, because the 310 actually measure the how you call that? Measure the accelerations, right? If we see the price accelerate so fast upwards, but the 310 refuse to go up, it means something is wrong. Something is wrong, because where the price goes, 310 have to go. That is what the 310 is designed for. That means that if we see the price drop, 310 also have to drop. Okay, that is what the 310 designed for. So in this case, you can see the price actually make a very obvious swing high, but the 310 refuse to make a obvious swing high. Right? We refuse to follow. So you know that this is a false breakout. So when the price pull back into a demand, you are not going to go long. Right? Okay? The next one I'm going to talk about, okay, before I talk about this loss of momentum, right? Any question about the 310, the new momentum high or the new momentum low? Any questions? You can ask your question right now. Because after this, right, this is trend trading, right? We use the new momentum high and the new momentum low to trade with the trend. It is work hand in hand, or rather, it actually supplement, right, the supply demand that we have been talking about. Okay, so never just look at the 310 and trade. Okay, that I cannot give you that kind of high probability, right? But you trade with the core concept of supply demand, and 310 act as a like a booster, like alert that, okay, well, I'm going to have a trade soon. Example, okay, example, you see the price dropped, right? It dropped, and you see a new supply created, and you see the price start to rally up. Without a 310, you have no idea. But now with the 310, you know that, well, I have another confirmation. We have another supply over here, price drop, price pull back into the supply. You look at the 310. You create a new momentum low together with the price. You retrace back to the supply while the fast line is above the zero line. Right? That is a setup. Okay? Question. Any question about the 310? Okay, Ikping here, your 310 seems to be different from the one you emailed us. Well, the 310 is from the future market, right? It's actually from different trading platform. It's the same actually, right? That 310 is, the 310 indicator is a common indicator, not proprietary at all. It depends on what trading platform you are using. Okay, Ikping? If you're using a TradeStation, you have this kind of different version, right? If you are using the MetaTrader, there's another different kind of version. If you are using a Thinkorswim, there's another different kind of version again. Okay, but it is not important whether the appearance of trade and how does it look like. But the most important thing is that you got to understand there are three components in the 310. One is the fast line, one is a slow line, and one is a zero line. Okay. The other thing that you need to remember is when the 310, we talk about the price making a new momentum low. The 310 also have to make a new momentum low. If the price alone make the new momentum low, or 310 alone that make the new momentum low without the other. Let's say one go without another. One Lone Ranger, it doesn't work. That is not the setup. Okay? 310, what parameter? There's no parameter. 310 is an indicator already, Jason. The 310 that I emailed to you is the indicator. What kind of parameter you still want? See? 310. What parameter you want? I don't understand. Yes. I mentioned in the previous webinar, right, those people who want to use 310, you need to email to me. I guess you never watch my webinar. You are so busy running around. Alright, I repeat again. If you want the indicator, you need to email to me. Okay? All right. Any other questions? Any other questions? Any question on the 10? No. Everybody clear? Wow, that's fantastic. Huh? Okay. So let's take a look at the euro dollar, right? Based on the 310. All right. Now, what do you see? What kind of setup do you see right now? Can you see? I'm excited actually to see this kind of setup. Right, the 310 help us to confirm. Can you see what kind of setup right now we have in the daily chart time frame? Right, in the weekly charts. Okay, we hit the higher time frame supply. You see that? There is a supply that we hit the supply. Okay, the market touched this supply so many times, right? And what happened after that? Market get rejected, right? And look at the 310. 310 supposed to follow where the price goes, right? You might call it diversion, right? Only people call it diversion. When we see the price, when the price goes up, 310 need to go up as well. The price come down, 310 need to come down, because 310, that is what the 310 is designed for. Can you see that? When it pull back, 310 need to come down. All right. When you make another high, see this high the market make a new higher high than the previous high over here. But what happened to 310 already shows some kind of diversion, right? But when you see a diversion, do not be mistaken that once you see the diversion, meaning the price is about to reverse. No, yeah, that's no. Okay, it just alert us, that's all. You can see after this diversion, the price continue to make a new high. So if you sell it based on diversion alone, you die. Right? So don't trade on diversion, right? It just by diversion alone, it doesn't have that kind of good probability. Now we have a diversion in price and oscillator. But what happened to the price? Price continue to make a new high. Price continue to make new high. Can you see that? Make a new high. Now 310 make now a lower high right now. Again, there's another diversion. Alright. So again, you can see that I don't trade on diversion, but basically this is telling me that I'm losing momentum right now. Right? This uptrend is losing momentum. Why? It is very obvious. The price hit onto the higher time frame supply. That's why it's losing momentum. Okay. So now, based on the weekly, you can see that we already enter into the supply. Now we go to the daily right now, and you see what happened. Draw our trend line. We have a trend line. This trend line is completely removed. Can you see that? All right. And what happened to the 310? See the slow line? It trade now below the zero line. What happened to the fast line? It make a new momentum low. You see this low? This low? Sorry, where's the low? This low. This bar. Look at the low here. And look at the low right now. Okay? Significant low. Obvious low, right? You can see right now the 310 is making a new momentum low, while the price is making a new momentum low. Alright? And now what can we do? Now what we are waiting for is waiting for the 310 to pull back to the zero line or above the zero line. Right? When this happens, 310 is following the price. Right? 310 can only pull back to above the zero line when the price starts to pull back above to the supply. Okay? While the zero line stay below the, this red line stay below the zero line, and that's where you want to sell. Right? So we can actually have a trade over here. I put my sell limit this afternoon, but it didn't come and trigger this supply. Okay? I have a trade there, but it didn't come and trigger, so too bad. Now another one is right on top there. Right? So these are the two supply that you can be waiting for the price to happen. Right? The 310 actually alert us already. Now the price is not yet ready to sell because we don't have the fast line pullback above the zero line yet. Right? So it's not a sell trade. So imagine if we see the price start to pull back to this level, this fast line could have pulled back to zero line. And if this work, then we see the price start to drop and the fast line start to drop again. Or if this supply get removed, then where's the next one likely to hold? It's either here. If the price can pull back all the way to 1.3900, the fast line definitely pull back above the zero line. Alright? And we want the slow line to remain the zero line. That is the setup. Okay? You see this dotted yellow? That is the weekly supply. Now is there something here? This one. We don't know, right? Let's go to the H4. See that? That could be another supply in a 4-hour time frame. Okay, it could be another supply in a 4-hour time frame. Okay, so is that understood? Okay, so basically what I'm looking for is I want to see the price to the 4-hour on this supply is not really, I don't know, yeah, maybe it will work, I don't know, right? Let's see, right? If there's a supply over here at 1.3830, which I will watch this level as well. When the price retraces up into this level, I want to see the fast line also stay above the 0 line, while the red line stay below. And over here, if they give me the key reversal bar, I will short the key reversal bar. Otherwise, I will take the short on the next higher, which is 1.3906. Alright, so basically I have 3 potential levels to sell. One is the 3750, the other one is this level, and then the next one, the ultimate one will be this. Alright, so that's what I see on the euro dollar. Right, when Yipeng this morning asked me to make some comments on the euro, I do not agree to go along with what Yipeng is suggesting, because of Yipeng was looking at the trend line break, etc., which he has his he basically Yipeng, you go on the H4, right, Yipeng? Did you go for the H4 for the trend line break, Yipeng? Yeah. So Yipeng is based on the H4. He say, well, there's a trend line break, right? So he want to go long, etc. I don't know, but I never really basically I just do not want to go long, especially if I look at the weekly time frame. You understand what I'm trying to say? We are really high on the curve, which I understand that this weekly has been visited many times. It might be overutilized and therefore become not as strong anymore. But it is against our trading rules to actually to buy when we are so high on the curve. Right? Location wise, we basically prevent us from buying. Okay, I'm not saying that you will not work out your way out. It might work out. It's just that I like to follow the rules, right? We have laid out the rules. I want to follow the rules to be consistent in our trading. Okay, in any kind of trade, remember there are 2 criteria we need to follow, right? Or sorry, not to follow. There are two criteria or 2 components in any trade that we want to take. The first considerations is the locations, right? And then we come to the structure of the trade. Okay, of course, structure of the trade will encompass of many things, right? We're talking about the risk reward. We're talking about whether the level is fresh or not, right? We're talking about the departure, the time in the zone, etc., right? Those are structure of the trade. So when we take any trade, whether you buy or sell, these are the 2 considerations we have to think. Either one of them is missing, it's a no-no, right? It's a no-go. So in this case, for euro dollar, right, you might be looking at the trend line break in the 4, therefore you're waiting for the price to come back to the fresh demand, and then you go along with the trend, which I can understand. But the location rules is we cannot pass the location rule, right? Because we are too high on the curve. Therefore, we doesn't have the 2 components that we looking for, right? You only have the structure of the trade. You doesn't have the location, right? So I do not actually comment. I do not want to comment if I don't agree with you, because sometimes you see, when you go long, which I don't agree, it doesn't mean that the price will not work out. It might work out, right? It's just that I like to follow the rules. Right? Once we have a set of rules, once we have a set of trading rules, we need to be consistent in our trading, right? One of the reasons people can stay profitable and long in this business is because they are consistent in one methodology, right? They do not just anyhow hopping from one strategy to another strategy, right? Besides the money management, besides the risk reward, right? Which Yipeng said that it's a holy grail. Not exactly, right? The holy grail is comprising of the 3 components, right? Which are they? The mindset, That's one component. We must understand that trading is a probability business. Therefore, losing trade is part and parcel of the business. Okay? We can't expect every setup to be a winner. Now, the second component is, of course, the money management, which encompasses the risk reward and the how much money can you raise, how much percentage can you raise per trade. Then, last thing is the strategy. Okay, so we need to be consistent in our trading. That's what I'm trying to say, Ping. Right? So I'm not against you going long. It's just that if I go long, that means that I will not be consistent in my strategy, in my trading. It means I'm breaking the rules. All right. So we are rule-based trader. So we don't trade with emotion like this. Someone was saying, Raymond. I think he made some comment on the Facebook. Right, supply demand without trading with emotion. Which is true. We don't trade without you put your feeling in. You think the market is going up, market is going down. I think the market is going up. That's where you're going to see. That's where a lot of problem is coming your way. The more you have that kind of concept, I think the market cannot go up, right? The more you have this kind of thinking, I'm telling you, you're inviting a problem to your trading. Okay, so in trading we don't want to think. We just have a set of very clear rule. We follow the rule. That's it. All right. So when you have tell yourself, you think that sometimes occasionally you are so confident. You might say, I think the market is going up. I think the market is going down. Things like that, right? So remind yourself, you shouldn't think. Right? You should follow a set of very, very clear rules and trade with the rules. And then if you follow the rules, then you become very consistent in your trading. Okay. Okay, I'm talking too much right now. Sidetrack too far away. Any problem? Any question? Sorry, any question? Any question? Okay. Let's ask, do we look at 310 on all time frame? I don't understand what I mean, right? Or exactly, I don't understand what I mean. For me, is if entry time frame is the daily, I only look at the daily for my. That's it. I don't have to switch around like weekly. Then I look at the 4 hourly for the 310. No, I don't have to. And then I look at 1 hourly for my 310. What's the 310 doing? I don't have to do that, right? What I'm doing is I basically look at 310 on the entry time frame. If your entry time frame is daily, 310 daily. That's it. If your entry time frame is the 4 hourly, look at 310 and the 4 hourly. Because when you use a 310, the thing is you cannot just look at the 310 alone, because the 310 has to go hand in hand with the price. You know why? Why 310 got to go hand in hand with the price? Anybody know why? Anyone? You know why 310 has to go hand in hand with the price? Anyone? MPP. What's MPP? What's MPP, Roger? Because 310 is designed. 310 is 310 is designed to follow the price, right? So where the price goes, 310 has to go. That is 310 is designed for that purpose. So when we see the price making a new momentum high, the 310 must also make a new momentum high. The moment we see 310 don't follow the price, something is wrong, right? So you don't look at you see the 310 make a new momentum high, but the price didn't make a new momentum high. Again, you need to have a question mark there. Why? And then you have to also in doubt. You have to have that new momentum high, because the price didn't make the new momentum high. Okay, so remember when you trade with the 310, it is both the price and the oscillator have to make a new momentum high, or both have to make a new momentum low. and then we consider that is a setup. By itself alone is not a setup. Okay? Okay, Raymond here, he said that it confirmed the momentum of the price movement. Confirm the momentum of price. Okay, you can say that as well, Raymond. Yeah. Right, anybody have any questions about the 310? Right, so this is 310 is basically for trend trading. What I have just talked about is for trend trading. Alright, next thing, if you have no question, the next thing I'm going to talk about is how to use the 310 to help us in doing counter trend trade. Right, remember when we do a counter trend trade, the criteria we want is we want the higher time, the price to be in the direction, or sometimes price is already trading to the extreme, right? Price is already in the extreme, whether it is an uptrend or whether it is the downtrend. Price has already in that direction for too long, right? It's already at the extreme. But the problem is, how do you know the price is at the extreme, right? The previous webinar, I talked about the SOT, right? Anybody remember what is SOT? Right? How do you know the price coming to the exhaustions? How do you know the price is at the extreme? We talk about the SOT. Anybody? SOT. What is SOT? Shortening of the thrust. Thank you very much, Ekpeng. Right? That's exactly right. So how do you know that when we talk about, when we want to do counter trend trade, we have to wait for price at the extreme. How do you know the price is at the extreme? Because in the uptrend, the price is at the extreme by looking at the shortening of the thrust. Right? That is one way we can know that price is already coming to the end or price is already at the extreme. Now, the other thing that we can use to know that price is already extreme is a loss of momentum by use of the 310. Right? You might call it diversion, but I call it 3 push. Right? When we use a 310, we call it 3 push. Okay, let me show you. Loss of momentum, the 3 pushes. Right? You can see that in downtrend, right? We have a swing low, another swing low, another swing low, and another fourth one. Look at this 310. Each time the market is making a higher low. This is the loss of momentum, right? When you have this kind of loss of momentum, or rather diversion, it doesn't mean that the price is going to reverse up, right? Many times, or very often, a lot of new traders, they come into this market, they try to make some money in the forex market, and they go and learn diversion, MACD, whatever diversion, and they start to buy and sell, and they lose money, right? Why? Because they trade based on diversion. If trading is so easy, a lot more people already become a millionaire, right? Trading is not that easy. Diversion alone is doesn't tell us that price is going to reverse, right? But what we can use is we can use this kind of diversion in my trade. When I use a trade in my own term, I call it 3 pushes or loss of momentum. Right, when we see the loss of momentum, especially when we are when we want to do a counter trend trade, I like to see a shortening of the thrust, SOT, or the 3 pushes. That is the first thing, right, which I like to see. It tells me that the price is already at the extreme. When the price is at the extreme, means the price is coming to the exhaustion. It's having in for way too long, right? It's supposed to either do a reversal totally, or either if you don't do a reversal, then you can expect some kind of temporary pullback, and then we can try to make some profit on that temporary pullback and do a counter trend trade. That is the objective. Okay. Now over here you can see that the price is making a new high, but what happened to the 310? It refused to copy the price, right? You call it diversion. This is what we call the 1 push, 2 push, 3 push. But the 310 refused to make the 3 push. And see what happened to the price? It dropped. Right? That is the uptrend. Then you go into a ranging market. Then we start to drop. Okay? Now again, you can see from here, right? 1 push, 2 push, 3 pushes. After the third push, you see what happened? The price again another higher high. So if after this three push, people start to sell, pop out, right? So remember, when you see the diversion, it's just an indication. It's just like telling us in advance, okay, I'm coming. The price is already at the extreme. Maybe this is the time that price is about to reverse or price is about to pull back, and that will allow get us ready for do a CT, right? Counter trend trade. Look at the 310, right? And see after this loss of momentum, you see what happened to the price? It make a, you see this wave, selling wave, and see the break of the trend line. Price retrace back up. Can you see that? Okay, we have a evening star over here. Back to the supply where you can actually drop, base, drop, price pull back one time, price pull back second time, and you dropped. Alright? And see what happened to the 310? After these three pushes, the slow line remain below the zero line. This is the zero line, while the fast line pull back above the zero line. Right? That's where you sell, coming to the supply. That's where you put your sell limit there. Right? If there's no sell limit there, you see there's a clear reversal bar, or you see there's some reversal pattern, you can use it and then enter the trade. Okay? Now, the next thing is it going to work every time? The answer is no, right? Because I think today I received a question why this one doesn't work, why that one no, not for anything. From our good friend, what's his name? Ming, from Ming. He asked me, he sent me a private message, Benny, why this one doesn't work? If every time it works, then again, trading becomes too easy, right? That's why trading is a probability business, right? Sometimes the seller can be very good, but it still can fail. That's why we say it's a probability business, okay? So in this example, you can see that 310 help us to tell us that right now price is already at the extreme. Hit to the higher time frame supply, you have a trend line remove, price pull back to the supply. At the same time, 310, the fast line above the zero line, the slow line below the zero line, you sell. Alright? Now another one you can see here with another 310, two push, third push. Right? Price continually make a higher high, almost go vertical. Right, what happened to the 310? The 310 refused to comply. Right, so that is an indication to tell us that we are already at the extreme. Let's look for some CT trade. CT stand for counter trend. All right. Okay. So how see what happened after the 310? The price break down. You draw the trend line. You break of the trend line. Price pull back to this drop, base, drop. Can you see that? Okay. You see that this is three different, look different the 310 indicator, because this charting platform is from another trading platform called what is that? What is the name of the platform? I forgot the platform already. But anyway, it's not important basically, yeah. Okay, loss of momentum. One push, two push, three pushes. Can you see that? Three push up, but the 310 refused to do the same thing, right? These are the same. No, different, yeah. It looks the same, but it's different. Okay. Make a three push, price drop, pull back to supply, it dropped. So this is a second leg. This is a second leg. This is the first leg. This is a second leg. Right? Price pull back again the third time. Sorry, the second time into this supply. While the 310 also pull back above the zero line. But this time the zero line is all the slow line is above the zero line. So it's a no trade. Alright, so this is a no trade. But the price is still work out, alright, but this is a no trade. Can you see that? For this second pullback, the slow line is already curved up above the zero line, right? The concept of the 310 is, if you want to sell, the slow line must be below the zero line. right? If you want to go long, the slow line must stay above the zero line. If the slow line is below the zero line, it's a no-go. All right? Any questions for losing momentum? Loss of momentum or 3 pushes? Any questions? Everybody clear? Okay. If clear, then we want to cover the last one, how we use a 310 for trend trading, right? So basically, we use a 310 for three purposes, right? One is trend trading. The other one is helping us to identify the counter trend. The last one is trend trading. Okay? Is it the same? Okay, trend trading. Okay, for trend trading is basically for us to go long. Let's say the price had been in an uptrend, right? The slow line above the zero line remain the same. The fast line pull back to zero line or below the zero line. The market structure must have a higher high, higher low, right, in the uptrend. And for us to sell, the slow line must be below the zero line. The fast line must be above pullback towards the zero line or above the zero line, the same, right? And the market structure must create a lower high, lower low. You can also use the 20 EMA, right, or trend line as a reference point to initiate the trade, right? This is in our optionals. Okay, so you can see that in this uptrend 60 minutes spiral, market is making a higher high compared to this high, higher low compared to this low, another higher high. So when the price pull back, this red line is your 20 EMA acting as a guide. What happened to the slow line or the red line? The slow line remain above the zero line, while the fast line pull back to the zero line or below the zero line. That is the setup for trend trading, right? Now price make another new higher high again. Price pull back again. This time, what happened to the price? The red line or the slow line remain above the zero line, no change. You see what happened to the fast line? It pulled back to the zero line, and that's where you initiate another long. That's called trend trading. Okay, for selling, now first of all, the price must already making a lower high, lower low, right? That is a prerequisite. The market must already making a lower high, lower low for a downtrend. And wait for price to the slow line remain below the zero line, the fast line pull back towards the zero line or above the zero line, while the price also pull back towards the EMA 20. Again, you can use the EMA 20 as a guide, right? You can see over here, you can initiate a short after this key reversal bar. Okay, so again, you can see price pull back and make another higher high again. Sorry, make another low, make another high. But it failed to remove this high, and what happened to the price? This slow line is still below the zero line, but you see the slope is towards up already. It's not so ideal. We prefer the slope towards down. Can you see that? The slope downward is better. But it doesn't mean you cannot sell, but it's still within our rules. Right? Our rules say that if we want to sell, our slow line must remain below the zero line. And the fast line pull back above the zero line, right? And sell. Okay. Here another example. See price pull back again to this high. Again, fail to remove this this high. While the 310 make another the fast line above the zero line for sell, while remain below the zero line. All right, that's another sell there. Okay, this is difficult to take already. Yeah. But if you use our supply demand concept, we have a break of the trend line. right? Price retrace back to the supply, right? You can look to a sell, but based on confirmation trade, right? When we have a trend line break, we have to use confirmation trade, no longer sell limit. So you can see again, we have the market continue to make a lower high, lower low. Can you see that? The fast line pull back above the zero line, while the slow line remain below the zero line. Look at here, price pull back. You can use either the 220 EMA or the trend line as a reference point. Remember I said that? Right, basically you use the trend line as a reference point. Basically you put a sell limit over here. Okay, use a trend line as a reference point. Use a trend line as a reference point, while the fast line above the zero line, slow line remain below the zero line, and it's a sell. Right, that's a trend trading. Okay, that's it for the for this short topic. Any questions? Anybody have any questions? New Zealand yen. Oh, sure. Let's take a look at the New Zealand yen. Okay, New Zealand yen. What do you see on New Zealand yen, Raymond? I don't have this. I'm using a demo account with you to do this webinar. I don't have this. Oh, have. So what do you see on this? Monthly, we are in the uptrend. All right, weekly, more weekly. Into the supply. Okay, the price hit onto the supply. Okay, and on the day. What happened to 310? 310 that really tell us a lot. Okay. Daily. We have a downtrend line. We have two peaks. Okay, or in fact we can draw this trend line. Okay, downtrend in the daily. And we have create supply over here. But we will not take this supply because we doesn't have 1:2 yet, right? And what happened to our 310 again? Right, we need this slow line. If you want to sell, I believe you want to sell, right? We need the slow line to come down below the zero line, right? So basically, what we want is we want to see the price to show some conviction by moving downwards a little bit more, right? And then if we can move it a little bit more, then we can use this daily supply. This is right now a potential supply. It's not yet as a supply. Right? It's only about 1:1 only, or even less than 1:1. So this is not yet a supply. So in order for us to look to sell, we need the price to pull down lower, at least to remove this. And you see that? We want this to be removed, if possible. Okay, if we see if the price managed to remove this demand, we would have 1:2, and then the red line would have dropped below the zero line. Then we see the price start to pull back. That would be a good a good place to look to sell at 87.30. You follow, Raymond? Okay. So we want the price to really show some convictions by moving downwards and remove this demand. Right? And then after that, we create that is a good to sell. Okay, any other questions? Remember, can you take the supply higher up? Higher up, mean this one. Yes, sure, we can take the supply. If the price did not fail to remove this demand and it start to retrace back up, you can always take a supply over there, take a short there, because it's still within our rules, right? Now the thing is, do we have the 1:2? We don't have it. Can you see that? 73 against 131. We still need the price to move down again lower. So ideally, right, we want the price to still remove this demand, right? Remember I always talk about this, right? We always want the opposing supply and demand to be removed first before the price start to pull back. If the price stop here and start to retrace back and start to move up higher, now what the market basically doing right now is telling us that, well, this demand is in control and I'm making a higher low. So if the market is making a higher low, chances are this supply you will not respect and you will go for the next supply, which is this one, which is the higher supply, which Raymond is saying, right? So you can still take the trade, provided the price can give you 1:2 first, and then ideally you remove this demand. That is the best scenario. But in the event if fail to remove the demand, say, well, I still want to give it a try. I mean, you can take. It's not that you can't, right? Okay, as long as you have the 1:2, you can take, because if the price start to retrace back to this and trigger your short at 8800, you are still below the trend line rule, right? It doesn't violate the trend line rule. It's still a valid trade. Okay, it's just that in order to have a higher probability, the opposing demand needs to be removed. That's about it. If the price removes this demand, the next one is coming to will be this one. Okay. So likelihood, this is the demand they're going to hold, because this is a level on top of another level. It's so near together, so near each other. Chances are the price will go for the second demand, which is this one, right? Which is this one, and this is unlikely to be removed. Okay, so I like to see that happen. I would like to see this removed, price drop further down, then I have enough profit to be made. Then I'll take a short here or here. And by the time this happens, the price drop, we will see the red line cross below the zero. And the price, if the price hold at this demand and start to pull back, then we see last line start to pull back above the zero line, and then that would be the setup, right? We change color for us to draw the demand supply. Candle need to be changed. Understand? What mean candle need to be changed? Does the candle need to change color? I don't understand. No, don't need. The rule is the candle that is less than 50% body is part base, and we should consider that is the supply. This is the supply. So it's 50% candle. Okay. This is demand. Okay. Anybody have other questions? How about some questions from our Venom side? Anybody have any question from North? Hua? Let me see who logged in. Hi, Desmond. I never see you log in just now. Hi, Jeff. Oh, Jeff from Malaysia. Log in, yeah. Finally see you again. Kun, is it Kun is pronounced Kun. Lam, Lawrence, Leslie. Okay, how are you? Good to see you here. Okay, I think that's about all. Any questions? I guess no, yeah, it's already 10:30, right? This session is recorded, all right? I think by Raymond or by who? Is it by Raymond or by Lawrence? I can't remember. Okay, after this, you can send it to Chang, and Chang put it on the webs. Lawrence, I guess. That's Lawrence. Okay? For those of you who attend tomorrow, revision at Peninsula Plaza, see you at what time? 12 or 1. I can't remember what time I say. 1. Okay. All right. Good night, everyone. Yeah. Thank you.